Hello everyone, Michael Lamott from ChartYourTrade.com. Our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that today is to help you figure out what to buy. Now, we run a lot of different scans to try to find the right stocks to buy, and the one that we want to go deep into today is our scan for recent IPOs. Now, there's new stocks coming into the market every single day, and we only want to focus on certain IPOs that fit the right criteria, that fit the ones that have historically been able to make moves of 100, 200, 500% or greater. So in order to do that, we focus on stocks that have these common traits. So let's go through what this particular scan looks like and how you can implement it on whatever scanning software you're using. So when I'm looking for recent IPOs, I want them to have accelerating earnings. And the reason why is because, historically speaking, the IPOs that have already had accelerating earnings are the ones that had the greater probability of running 100, 200, 500% or more, especially in the kind of market environment that we're in right now, which is a very strong bull market. So when we're looking at recent IPOs, we want them to have the following. We want to look for IPOs that have the trailing 4 quarters of earnings per share greater than 0. This means that the IPO, the company is already making money. Whatever it's selling, whatever it's doing, it's already generating money and it's already profitable. It's not just an idea, it's not just potential, they're already making money. We want the current quarter earnings per share to be greater than the same quarter of earnings per share from last year. And the reason why is because this is something that's going to normalize seasonality. We want to see quarter over quarter from the same year last year, not just from the prior quarter immediately following, because let's say a stock has, or a company has, a hot summer and then it starts to cool off in the fall or in the winter. Seeing this quarter versus the same quarter last year is going to normalize that. We want the percentage change in 2 quarters ago of earnings per share versus the same quarter of the prior year to also be greater than 0. Again, this is going to normalize the seasonality and also ensure that we are accelerating quarter over quarter. We want the IPO date to be within the past 2 years because we're looking at recent IPOs. We want the current price to be at least $15 or greater. The reason why is because many of the larger mutual funds, pensions, institutions, etc., they only look at stocks that are trading of at least $15 or greater. Some of them have rules that dictate the price at which, the minimum price at which they could buy stock. So when a stock is trading at $15 or greater, we'll typically see an increase in the volume of shares traded in that stock. And that's something that's going to help us because the more funds that are piling into the stock that we're interested in, the greater the demand can be and the further that it can run. We want the current price to be no more than 15% off of its current high. So we're not going to look at an IPO on the day of its IPO. It needs time to set up a technical pattern. It needs time to form a base. So many times I've seen an IPO come out, people try to buy it on the day of the IPO, they think that they're getting a great deal, only to see it fall 50% within a couple of weeks or a couple of months, and then it finally bases out, and within several months or sometimes even a year, it finally rallies back up to the original IPO price. So we are not interested in the current in buying IPOs on the day they come out. We want them to base, and we want them to pass our scans when they are within 15% or less of their high. And finally, we want the IPO that we're interested in to be in the top 50% or greater of all the sectors that are currently ranked. That way, we're focusing on the hot sectors. So that way, it's another thing that's going to raise or increase the probability of the stock having a big move. If the whole sector is having a big move and all the stocks within it are going along, then that's something that will help our stock move as well, and it's not just going to be a lone wolf stock. So let's take a look at some recent IPOs. We'll look at the scanner that I use. I use our own scanner, ChartYourTrade MRI stock scanner, and let's see what it pulls up. Okay, so we have our ChartYourTrade MRI stock scanner open. Let's go to the IPOs. So IPO Scanner, and it just ran all of the, so this is the IPO Scanner, and let's see what we have here. We have 11 results this week, and let's go through them. So the first one is Athene Holding. The ticker symbol is ATH. This is one that IPO'd in December of 2016, and so far so good. It ran up. It formed a little bit of a base back in January. Could have gotten in at an early entry back at around 47.50. Set your stop loss right at around 45.50, 45.40, and you would have had a little bit of a run right there, and now it looks like it's trying to base out again. The next one up is CSRA Inc. They IPO'd back in November of 2015. Had a bit of a run, and then it consolidated, and now it looks like it's consolidating again. And well, what I want to highlight here, for technically speaking, is that it formed this deep cup, and then it formed a shallower cup, and now it's potentially forming another shallow base, and we could see the character of the stock change right before us. So we have this deep base, then a very similar looking base there that's shorter and shallower, and it's doing that again. So I think that and it continues to consolidate right around the IPO high of 33.44. That's the major point of resistance, and so if it's able to climb above that and sustain it, then I think that we could get a bit of a run here. So look out for that one on CSRA. First Data Corp. This is another one there that based out. You see, so this is why we don't just run after IPOs. You could already see that here on the day that they're initially offered, because they can run up or immediately collapse, and then who wants to deal with a 50% drawdown, right? Just to get back to even. But if you are patient and you wait, you could get an advanced entry point somewhere around here, or you could use this as a base and buy in right around there, or this base over here, or it looks like it's forming another base, potentially flat base. I see a potential advanced entry point forming if we were to draw a descending trend line from this high here, connect that one, that high there, and you would have an advanced entry point probably somewhere in the 1850, 1875 range. Hilton Grand Vacations, here's one that IPO'd. It consolidated very fast, and the advanced entry point would have been right at around 27. Didn't give us long to get in at all, but you can see how the scanner works and how it's capturing these IPOs, and so far all these IPOs have been successful to one degree or another. So we really want to focus on not just any old IPO, we want the IPO to have accelerating earnings. Now, there'll be IPOs that don't have accelerating earnings that do go on to do magnificent things, but when we filter based on accelerating earnings, as we're seeing, it's giving us a much better opportunity to find an IPO that is going to have a big run like what we're seeing here. ICHR Holdings, this is another one that didn't wait too long before it started a massive run. So far, it's up over 300% since January. We could have gotten in right at around 1125. So it IPO'd, the high of the IPO was 1123, spent about 4 weeks consolidating, and then it was off to the races. Match Group Inc. This one IPO'd back in November of 2015, and it's been running really since April of 2016. I've seen a lot of IPOs make this kind of a base as well. This actually looks a little bit like Snapchat, if you ask me, with this kind of a base here. So Snapchat's still consolidating, so keep that one on the radar. It's not on this list, but it's one that I'm following for other reasons. Anyway, so here Match broke out, and it's run over 100% so far. Look at Ferrari. Here's another one with an epic move. The time to get in would have been right around here at 43. And that was the first advanced entry point. Draw a descending trend line, connecting that high, this high, and all the highs. And then once it finally breaks out, that's the entry point, and you would have your stop loss right around here at around 41 when it's breaking out. And yeah, so far, every time that it's pulled back to its 10-week moving average, it's rallied right off of it, and it's consolidating a little bit right now, forming another base, and that could be another buying opportunity. No, we'll see. It did have a bit of a parabolic move right here, so we'll see if this ends up being more of a double tap where it's already had its big run and the major players are going to get out, or if it breaks out over here. I think it needs a little bit more time right now before I'd entertain buying it here. If you're long and you've held it for the duration, I would certainly be looking to unload at least a little bit at this point. Grupo SuperV. I'm sure I butchered that one, but the ticker symbol is SUPV, and this is another one that's been in a very hot sector, and it's run. It's having its own parabolic move right now, and if you're somebody there that's sitting on 100% gain, it might not be a bad idea to sell at least a little bit into strength. I love to scale out of positions and then let the rest ride. As I'm making more and more on a position, scale out a little bit, take something off the table, so that way when it does have that correction, you're not giving up all those gains, and psychologically it's a lot easier to hold through a normal pullback if we're not giving up all of our gains. And then we could always add when the stock does pull back. TPI Composites. This is getting close to a buy point. It looks like it might be forming a 3 weeks tight this week. We'll see. So I'm filming this on Thursday. We'll have to see what it does tomorrow, but it looks like it's well on its way to form a 3 weeks tight pattern, in which case let's take a look at the daily chart and see where we would get in. Like, we would probably look to get in if it could rally above, I'd say 23.50, but I'd be looking for it to do that next week. Don't really like how it's rounding out this top too much. I think that there might be better opportunities, but come back, look at this one. It's past these fundamental screens, and so therefore it's worth being on our radars, and we'll see when the right opportunity presents itself in this one. The trade desk. This is one that we've been actively trading for a while, and it's been on our radars for a very long time. It IPO'd in September 2016, and the time to the first buying opportunity was right at around 31 and a quarter, and it's really been off to the races with this one since. So whenever, as you've seen in other videos too, and as I've already mentioned, as I'm making money in a stock and as I'm making multiples of what I've initially risked, in this case I would have set my stop loss right at around 28 on the breakout, at around 31.50. So as I'm making multiples of what I've risked, I like to take something off the table, so that way I'm locking in gains along the way. When I have at least a gain of 2 to 3 times the amount that I've risked, I'm definitely taking at least something off the table. So in that move there, you could bet that I would be selling into strength, and I wouldn't be selling everything into strength, but I'm at least taking something off and then raising stops on the rest. And you could do that, well, when it consolidates and it forms these other buy patterns, and that's one of the reasons why as well, when stocks continuously pass our scans like this, it's so important to keep them on the radar, because you just never know when the next opportunity to get into some of these names will be. And if we just write it off, if it has this kind of a move back here like it did in March, and it's consolidating and now it's below its 10-week line, that and we're moving on to other things, then we would have missed this nice run here of almost 100%. So just something to think about. Finally, the last stock that we have on this IPO scanner is YRD. It IPO'd in December of 2015, had a very nice run between, around February of 2016 up to its high in August of 2016. This was actually one of the best IPOs that the ChartYourTrade MRI scanner captured in 2016. And it's still on the radar, and it's still passing this scan because it is within 2 years of its IPO, but we could also see that it's passing multiple scans. So when any of our stocks are passing multiple scans, then that's something else that we want to be mindful of as well, because if this is a stock that's fundamentally or technically good enough to pass multiple scans that we've set up, and we've set up rigorous scans, then we really want to focus on those, because it has many of the qualities that we're looking for and has that much better of a chance to make an epic run like it has. And so we see that it consolidated, and it just like earlier, like we were talking about ATH, YRD consolidated, and then it's getting the consolidations are getting tighter and tighter and shallower and shorter, and then it really tightens up down here, and then bam, it's off to the races again. The only way for us to capture these kinds of moves is to, one, be patient, and two, keep them on our radars for as long as they are passing our scanning criteria. So that's how and why we want to focus on recent IPOs, and we want to make sure that the IPOs that we're looking at already have accelerating earnings, because there's so many IPOs that we could be considering, but we only want to focus on the ones that give us the best chance to participate in an epic run like the ones that we've seen. Thank you so much for watching this video. I truly appreciate it. If you have any questions at all, please leave them in the comments section below, and I will personally answer you. And you'll also be helping out anybody else that's watching this video, because they might have the same kind of questions that you have as well. If you like the video, please click the like button, subscribe to our channel so that way you make sure that you receive all of our updates. And thank you again so much for watching. I truly appreciate it, and I'll see you again in the next video. Take care.